Hello and welcome, as it is the 31st day of January 2018. Everything you do, like always, within your own risk, own reward. What I'm going to do in this video is do another back in time, and I've done it with silver, gold, several different stocks in the stock market, and this strategy is working with all of the markets. And I want to do a code that I haven't done, and I've been doing a lot of them. And AMP, I remember, I think someone asked if for analysis upon. I'm going to go back in time, I think, with that one. I haven't really seen much of that recently. And if anyone does ask for a request, I'm probably not going to do it. However, if anyone happens to end up giving any type of gift via cryptocurrency or state, what's your blah 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 address, I want analysis on this, I'll send you whatever. I mean, I would obviously do it in a case like that, but what I want to do is really go over trading mechanisms, different strategies and such, and that's why I'm really liking doing stuff like this. So take a quick look at AMP on the site. This is tradingview.com, and it's like a B+ site for me. B+ because there's so many different features in which could be better within this. One being the logarithmic scaling, and just a few other miscellaneous ones as well. But it does a very good job. I do have a pro version, or one of the ones I pay for. I paid the minimum one. There's like 2 or 3 different things. I got the cheapest one that you can buy. It gives me more data, so I'm going to be scrolling back in time. And I remember reading it says you could scroll back a bit more, but within cryptos in the daily, I mean, most of them have limited data anyway. I can scroll back on the daily to like many years on the stock market and gold. It's pretty cool. And just so many different cool things. I could have multiple alerts and this and that. So anyways, as far as this chart is concerned, this is a classic descending triangle with multiple hits within this support level. I would definitely not want to be a buyer at this price. I would have earlier on here at this point, but not anymore. I'd be looking for a price target move back down to about the 3,000 handle, maybe 31 to 31.50, even 32, as a possible entry area. So to go back in time, what I like to do is I use that mouse button, and I'm going to really fast scroll the mouse down just so I can get a lot of data, and then just move this to the right by pushing the left mouse button and just moving it to the right. So there's the data, there's the high volatility, and there's not much data on this. All right then. So the whole point of these cryptocurrencies is these moves. There is no way of knowing after this day, which was a very bearish setup, that this thing was just going to take off like major proportions at this time. This is a situation where you had this major level of support. It broke through it. The support was in at about 7,000-ish. It falls down to 6,000. Very close, of course, to what this resistance was. And when you get this in just one day, going from 7,000 to close to 70,000, sell order fill, sell order fill, sell order fill. It's crazy. And when you get those big moves, one of the things I'm always going to be thinking of when I first see it is, unless I see some sort of good bullish reason, but not even really then, I don't want to buy it until it gets back to the 18 average of highs area, or even maybe at the highest, roughly around 3,000 or 13,000 rather, at this level of resistance. When you see something like this, and then you see a large size move, it takes a day or two, and now this is what, 7 consecutive red candles down to this 18 average, and of course there would be that number. Now at the point, you have a situation in chart analysis when you see something like this happen. You have obviously big buyer or buyers, and when I say that, the big money that got it, anyone buying else just regularly or afterwards, it's small money, they don't count too much, they're just following the trend. and doing what they want to do based on their situations, but whatever. But you have these sell-offs in here. And you come down to the correctionary phase at the 18 low, previous levels of resistance and such. Now you're in a wild card situation, because if it's a real move, it's a great buying spot, long term, let alone short term. But if not, this thing could very easily, and oftentimes will, break down further below the 18 average of lows. And playing the game within the selling high, buying in here, to me, is an obvious situation for all sell points. Well, basically 20,000-ish. For when if you sold here at 58, you got two options. You can buy it back here, or you could take the chance, as you can see here, and even try to buy it back cheaper. Because you see these major extended moves, it's going to be very rare for many of them to actually hold, especially when they happen in this kind of manner and not in a decent move like this. A couple decent green candles, goes up, and well, maybe if it would have went up to here and then pulled back, well, it would have been a different story. And oftentimes you're going to get these insane kind of moves. And this is what I hate doing. If I do this, that would kill my 18 average. Remove all indicators and drawing tools. No, just the drawing tools. But if you did say you want to enter a position, there's a very decent risk doing it even here. Although you could easily go for short-term gains. If you see strategy as it plays in something with the wild 18 average, which it is, you see how it gets really fat or larger or however you want to name it. That means the difference between the low and the high is more volatile. So you have the opportunity to attempt to buy at 13 change and sell below 20, which is going to result in close to a 50% gain if correct. And then you see further decline. That is a situation where the riskiness comes into play. However, it did manage to make a move from this low down to this high. Now, as I mentioned about before, if you're anything below this number, you were to buy back, say here, there'd be more buying, but now you're talking about everything you sold up here is now being bought in here. And what you bought in here most certainly should be sold somewhere up here. When you're talking about buying at 9,000 with price action going up to 15, there's your 50% gain right there. And then selling here means you can buy back in here. And then you get situations like this. And this is very common. It's happening with a lot of markets right now, where it just goes in a neutral phase. And you don't know if it's going to be a decent sized break or break out. Maybe you might get information to know, and if that's the case, you can be very rich very fast if you can get good, consistently decent volumes of this information within your life. But you just wait it through. And you're waiting it through. I mean, the only way you're selling at these tops and buying at these bottoms, which can be done because you're still going for about 10+% gains, is if you're playing this on a shorter term time frame, like the 1 hour charts or what have you, not on the daily. And there you see a situation where the opposite of the 18 average getting fat. This is a spot where the 18 average is getting really thin. There's not much of a difference between the highs and the lows. Before it was 50% from low to high. Now we're talking, well, it was 10%. Now it's like 7-ish, whatever, it's lower. So you have the break below. It met, if you bought here, you don't want to buy unless it has a decent size move lower. Maybe not till about 6,000 or lower. But it still continues to correct within it. You can have these small pushes here, but that's not always going to mean that it's going to go down. And the beautiful part about buying within this strategy is you're playing it like you never know the short-term moves. You can still understand any short-term analysis that comes up because the current analysis is neutral at this point. But you know when markets go higher, you're going to get a lot of crazy things. And if you hold tokens, you got a sell order here probably at 17 change. Maybe you get up here at 30. Maybe you have one up towards the 60 level, maybe at the 100 level, maybe double than that, a triple than that, whatever large numbers you choose. Or you can go with a lot of different numbers, and then something like this happens and maybe a third of your orders or half or 2/3 get filled. But it's awesome when that happens though, because you can get guaranteed profits pretty much. Well, you definitely get profits, but usually you're going to get amazing buybacks like almost every time. So the market stays neutral in here. So now you got the down move. So you consider, do I want to buy more yet? It can be a little bit of a tough decision at this stage because here you are breaking down from a level around 79. Now you're down to 6,000. It's still an okay differential in price at about 25%. But you also realize that you can still easily get towards like the 5,000 handle too. But that's the gamble. The gamble in trying to get 5,000 means you get a better entry price, but you could miss out on a situation where the price action comes back up to this 18 average of previous highs, because if you bought now and it happens to move up to over 10,000, you're selling. And then the market happens to have these moves. And here's a situation where if you bought, and the key word on this is always going to be if, because if you did, it's just going to stay neutral. But if you bought here, you should be selling here. The easy thing is once you see you're buying at a much lower level and it's clearly breaking the 18 average of highs with sufficient amount of time to sell. I'm not going to say you're going to sell at the top, but even if you sell at 87, whatever, in that area, a couple hundred basis points below, you already got your buyback, but only buy here if you sold here. And then you can say to yourself, I'm going to take a chance again because I think there's going to be a bearish setup. I can buy more or I can just get a better deal if I try to go lower. That's part of the whole gambling part of the game really when it comes down to it. But the safe play would be to buy now. And then if you bought now, you can sell again. Okay. Well, if it's going to go sideways, it's at the upper end of this range, and I'll just buy back when it comes down again to 6. And then if you say it didn't come down to 6. What was your previous buy before? If it was in this, like, say, 8,000 area, well, now you're talking about a buy fill at 6,000 that was getting filled, sell filled at the 10. Then the last buy higher than that would have been around the 8,000 number. You can sell it for a profit. You could also say, you know what? I like how it's breaking out. It's above the 18 average, so it's a time where you should sell. But if this thing can just go a little further, I could probably get this close to 15. And the safe play lost because now you got at least a 15, maybe up towards here. The question is not if you sold, but at what price points you sold. Because even selling in the 15 area here is going to usually result into good situations. If this thing ends up going sky high and you're going to basically you're going to run out in time, you're going to get some good profits when it's all said and done as it is anyway. And your whole point is always to sell so that you could hit 4 or 5, definitely at least 5 sell orders in a row at decent increments each time. So there's a spot where you have the rally back down to the 18 average. Now this is one of those interesting spots because it's if you got back in. And I can see why I wouldn't. Where even if I sold in here, I'm like, okay, I want to go to the 18 average of lows. So the 2 days, this day and this day, I might have bought as it was getting closer. I'd probably have buy orders definitely a little bit lower than where it was. Whether I would have just given in, and I do this for both sides, sell at a lower price or buy at a little bit higher in these situations. Well, if you did buy here, now you're talking about, oh, sweet, I can sell at 19, and I would, easily. And that's where my sell order would be. It's like right under here. So my sell order would easily have gotten hit, but I pretty much just at the time this closed. And now let's continue on further. So now you have further gains. Situations like this, when I talk about selling in increments, you really can't sell here if you did before. At least I can't. It's not, I mean, you're talking about selling at like 19 and now you're talking about a difference up to 21. You're really at 20 even for that matter. Yeah, 19. So a gain of like 10% more. I kind of would want to see a little bit better of a decent sized gain than that. So I'm just going to remove some of these drawing tools and then continue on with the market. So the market goes down to the 18 average of lows. I don't think I would have done anything as far as buying. I would probably wait for price action to come down a little bit further, and the only way I'd be buying at these prices is if I was able to get a sell order in, and it'd have to go north of the 24 handle for me to do such. So moving time, going sideways, missing out on a lot of short-term trades. And at some point there you're going to sell, because I wanted north of the 24. It got north. Now the only way I wouldn't have sold is if my sell order would have been a little above that point. But then, if it was, I would have ended up getting it here for sure. And if I sold here, I would not have bought the 18 average of highs. I'm looking for the 18 average of lows or better. In some cases, I'll take the highs if it goes really, really high. Like in some of those major moves. So now you have this situation on this rally. If you sold here, 31, it's an okay differential, but not great. If you, of course, you did sell here, here's an interesting thing. Let's assume you did sell up towards that high, and you're selling decently above, but not magnificently above, but you did sell somewhere, anywhere from this point and further. And you're looking at the situation of where you go from here. So on this day, you should always have more orders. So where's your next sell point going to be? What we'll do is we'll look at more chart action coming in. So at this stage, the price action was breaking through this level of resistance. So you're basically going for decent segments higher. Maybe 49 to 59 is where I'd be looking as the next potential sell. But 18 average of lows. And it's rising. So that's one of the things I'm going to be looking for. 24,000. So a buy order would be between 25 and 26. Okay. Nope. Nope. And you see, definitely now on this day, it's over 26. It doesn't hit. But it would have ended up hitting here. Or you just gave in and you bought at 27, 27.5. It's not going to work out to much of a difference now either way. And that's, of course, if you sold up here. Now, let's just say your last sell order was, say, up around the 30 number, and you didn't sell up here because you're looking for better gains. I don't want to buy at a small level here, unless I know something fundamentally, which I really never do. Then I'm going to wait for a price action, maybe to come down to here at the 21-ish or so handle, 22 handle. And I probably have a buy order here as well. So the market would move. It's going in the sideways range. Buying down here meant there was a chance to sell up here, but there's a definitely chance it didn't because your sell order might have been like 34.8 and it missed. Long considered consolidation. So these are times where when you're looking at your portfolio for this code, and hopefully you're playing other ones as well, you're just going to see this and you're basically going to look at it for like 20 seconds during the day and then maybe look at it once or twice more in the day and then keep on moving on until something happens. And here's a spot where something did happen. But overall, if you're looking for either a move down here or a sell higher, you're just doing a lot of waiting right now because small moves above a neutral 18 average like this isn't that much. So here's that spot where the market comes down to the 17,000 down towards. So a lot of buy orders would get filled here at this spot. Now, when you have a situation, if you're able to say fill an order in at say 17, do you sell at 22? You could. It's a half a decent gain. Oftentimes I'd be thinking, you know what, I was just going to buy here anyway, and I'm just going to wait for the 18 highs. Maybe put a sell order in at that point. So I'd put one short-term sell order in at around 280. And probably one up towards maybe 390 something, and maybe even one even higher than that. As far as where your buy orders would be at this time frame, and you can put some horizontal rays in. So we'll put first one in. We'll say put it at this one came through again. So I'm just going to put one in towards key previous lows. What's the number? 6,000. So I wanted above it a little bit. I could probably go 6,020. What's the big difference between 6,020 and say 6188? Well, you get a little bit better of a chance of buying it at 6270, not by much, and you get a little bit better profit if you buy it at like say 6,050, but not by much. And again, we have horizontal rays we want to put in for the previous highs, but I'm just going to recognize that I would have one in here. And okay, here, and maybe place one like right here, 100,000 or million, whatever, just the key number. I think it's 90,000, whatever. Underneath this level, if any weird type of unexplained action happens, you're going to be happy that you got that play in. So let's go further now. Okay. So this is the low that did not hit where your buy order was. But when you're in a situation where you're watching this market, at some point you're just going to be buying. And quite frankly, when you're at this level of support, you don't know there's going to be this extra wave lower. So this is a spot where you're probably going to try to pick up between 2 to 3 buy orders down here. And again, buying at the lower levels, like at the 10 handle, the even number. Instead of, you can see here, for 6,000, getting extra greedy cost you on a play. You wouldn't have got anywhere near as good as profit on the 10 compared to 6, but you would have got the profit here because the market moved right back up the next day to 17. That would have been one of the very rare times you'd ever want to sell below the 18 average of lows. But also thinking further, let's assume you did buy at the 10. Interesting situation on this day. You could take a sale, try to buy back. I have no problem with that. But now you can get quote unquote greedy at the right time and try to sell this around the 20 handle, even north of 20. Wait for this to go north of the 18 average, and this could even work out in time, and this would still be a loss based on the selling now, where it goes down, then later on it breaks out above the 18 average of highs, say around 18 or 19. But of course, if that's the case, you'd be able to rebuy back this quick. If you sold at 17, I'd have a hard time buying back at 13. But there's a situation, markets come back lower, selling at the 18, below the 18 average of lows or whatever would have worked out. But even if, say, you bought here, held it, you didn't get it, and then you end up buying more, long term you're going to be doing fine. But I also like doing this strategy or buying when you're playing this on the long-term time frame, because if you're just trying to enter into a position in here and you think it's down so much, you do end up passing here, well, now you're going to have to wait a long time before the price action can come up here. It's a spot where you're going to have to remove or lower or add lower sell orders. So maybe you add one right at the 32.8 mark. And then say you might even start to add sell orders here, because that's what happens when the markets go down. Same thing when they go up. You just have to increase your buy orders at times because movements of the markets. But when you see this, you buy here. I mean, if you're just looking at the market and you're looking at this, how do you not buy here? Okay, maybe you want a little bit cheaper and you might get it. Keyword right now is just a little bit. Now a bit cheaper. Situation of grinding lower. Interesting aspect. Because if you're playing this, let's say you bought somewhere in here, which would have been north of 7 or south of 7,000. Now you see it at 4,006. You're like, man, If I buy now and the price comes up to the 6,800, I'd be able to sell. Where if I don't, I'd be selling this position at break even. However, of course, by buying here, if there's any type of, even a small break below the 18 average to like 3,000, it makes it difficult to buy after you just did. But very easy to buy if you didn't just recently do so. Okay, so let's remove some of these drawing tools again, although all my sellers are gone, but we get the point of what we're trying to do. So yes, so you did buy at this area. Now you can see you can sell that, where before it would be at a break even. So that situation happened. And in markets, when you have these moves and a decent bear market, it can oftentimes be a very difficult struggle for these to end. Now, you can have these monstrous moves that we've shown on the onset of this, but you can have a lot of choppiness back and up and down. You can have this become failed rallies oftentimes. And just a little bit of an early spoiler, it's January of 17, so this thing will most likely not get going until March or April when everything else did. And there you have it. So selling here, it's a bear market. Technically, you could get a profit and a good one. Say you sold at, say, 64, you're buying at, say, 47, not bad. It can be better. Because in a bear market like this, I'm oftentimes going to be probably looking towards getting within this congestion area somewhere at least, maybe around 4,000 even. And there we have it. And of course, that's like the conservative level. If you played lower, you definitely got down to 36, 35, down to 32. And of course, if you bought, say, up around, say, 4,000, now you're like, okay, maybe try to get it at 3. It looks obviously you did, because you could see price action did hit 29.91. So you buy it like, say, 3,005. And you could consider selling now, but I wouldn't. Because if I'm going to be selling close to, at, or barely above the 18 average of highs, it's because I bought well below the lows just recently. But this one you do sell. Very, very easily do you sell that. Again, like I stated, these bear markets can have a very difficult time. I most likely wouldn't get the buyback because I don't think the market, given that this is now like second week of March, that it would come back down to 3,000, but that's probably where I put my buy order. And that's exactly it. Now you got your decision. Do you want to sell some more? Probably, if you sold around 42, probably not. I'd probably looking towards into the like 55, 56. Okay. So you'd sell some. You definitely, now again, at least 2 sell orders filled. If you have a sell order at 99.95, do you just take 85.95? I can see why you would in a spot like this. 18 average of lows is 4,000. It's rising, so I'm probably going to be looking to put my first original buy orders in around 42.50. Over the next 2 or 3 days, I'd probably rise it up to 45. That would be the plan at this stage. I'd have my sell orders in place. I would see resistance big in and around the 13 to 15,000 area as the next point. And there was the 18 average of lows test. So selling up here and being active towards the market. And it was close if you got the buy here. But if you did, this is again, if you get it, you win. If you don't get the winning play. Because it's a matter of buying. And 6,000 is such a psychological even number. Oh, it's, if you sell it, if you buy at 6,000, there was a chance to sell at 9,000. And there was a chance you missed that as well, depending on how fast it moved down. And you'd be like, maybe, and there's a good chance that it's rising. You're waiting for higher prices. However, if you played barely below this high, which is something I like to do in this spot, there's a good chance I might have hit that. Just pretty much perfectly. because that's what I'm looking at, is this high and placing sell orders just a bit below. So in this situation here, selling here, successful buyback, which meant you can sell probably in this range in here. I would have thing about this is you have this uptrend. And when you see an uptrend like this, one, you get giddy that you're probably going to get some nice sell orders forthcoming. But now it also starts to mean you buy some small amounts in here. There's another 18 low hit. And of course, if you missed this, you had some opportunity to buy back here. If you buy here, you don't want to buy back again until like at least down to like 6,000. So there's a spot where I would probably easily have missed that a buy order here. But if your last buy order was, say, back in here at 8,000, and you definitely had some sell spots in here. But when you look at these 2 days collectively, there was no excuse not to sell this next day if you weren't able to get anything on the way up. And I say that because after this day, price action comes close to the 12 and then pulls back to about under 10. So if you happen to miss a sell order, which should have been underneath this high to begin with anyway, then you should have placed it after that day for the next day, which would have hit. And then if you see the situation where that's the case, I'd be looking to buy right now at about 72.50 because that's where the 18 lows is. And it didn't hit. So I can't sell here because that's where I sold before. Markets move. If it has a big gain higher, I consider it here, but that's not that large of a break of resistance. And there's some buybacks, if of course. But even selling up here, it's a tough decision. Of course, buying here works well. And now you're looking at a situation where you get multiple sell orders in a row. So you sell up here, you definitely don't buy back. Now do you sell up here? This one could be close, but if you're selling at, say, 150, differential for 220, I mean, that's 50%, 40-50% differential. That's considerable. Sideways moving action. Very difficult to sell up here if you sold up here. But this is where buy order cities come in. Because even if you say, let's say your last sell order was, I want to give like the worst case scenario here because I want to be real with these situations. Say you sold it here and you didn't settle for any of this. If there really should be no reason why your lowest sell order was anywhere lower than this line, or at least near it. Because if you sold here, there was no excuse for not selling here. But selling here at around 20 and seeing the price at 11.5, yeah. In fact, now you're talking about selling here. You can get a decent profit, or I'm going to buy that one back down here at close to the 9 handle. And there you go. You can add anything cheaper. So your buy order city moves the market. Buy down here if you got it. Buying here. You see this green candle, you got to be selling. Just got to sell. And you see this thing in a bear market like this, or turning into such, you see it's at an area where it's could easily bottom. So do you buy at a higher low, which recommended spot would be 18 average of lows? Do you buy at previous support, or do you think it's going to go down further for a lower low? That's the judgment one would have to make based on where they feel the message of the market is stating. So bullish market, 18 lows, neutral, unsure, previous low, bearish, lower low. So there is a previous low hit. So if you bought at, say, the low at 72, you see the price at 98, not a bad sell, but I could easily see how you might miss it. However, if you play the psychological 99 game, it would have worked. After all, if you buy well below the 18 lows, if relatively quickly it comes up here to the 18 highs, or barely above, I'd be looking to sell. However, it was a few days, 3 of them, and 2 days to get up top. It took 5 days, so that's not slow, but it could be quicker. And as the market goes down below the support, you see the situation where the market had the beautiful gain, a huge crash, this bear flag sideways consolidation pattern. When it breaks this support at 67 and you see it at 64, I mean, this is where you might say, you know what, I've accumulated all of this. I don't care where I last bought. I'm just going to sell now and play a short position and buy her back. Sometimes you're going to be right. But then, as I showed on the outset, sometimes, or the start of the video, sometimes you can see what looks like a very bearish situation, the market goes up 200% the next day. And you never know when that's going to happen. So that's why I would never do it for at least that reason of just playing the short position. But there you can see the short position's winning. It also means, yeah, now that I'm down here, price action broke 68, now we're in the 4,000s, you can consider buying. You can even say, I want cheaper, I want 4,000 even. Of course, 4,000 even, you have a decision to make. It's not bullish by any means, but it hasn't been going down. It's been grinding sideways. If you're looking for entry positions again and you haven't bought near there, maybe at one of these days you just give in and buy. But as you can see, it's grinding lower. More buying in here. If you bought at 45, now it's down to 35. Okay, differential. But if you didn't buy there, say your buy before was, say, 6,000, I'd be looking to buy. And there's a spot where if you bought anywhere around 33, 34, now you can sell at 48. You can look to buy this thing back down again at 3,000. And with all the buying that you're doing, you're just hoping this thing can just keep going up because you've got a lot of tokens or a lot of coins. You can maybe sell 7 big fills in a row because you bought so much. And then there's the spot where you're coming close to buying back if you sold here because you want to buy back close to previous low. This isn't doing it. And that did. And then if you thought lower low, no, I don't want to do previous low. I want to do a lower low. Well, now the question is, do you get the 2,500? And it works. If you buy 2,500, I see the 18 average of highs at 34. So I'm going to probably have a sell order easily in around 3,300 for the next day. Buy orders, more of them got hit. So when I said before that you had a lot of tokens, well, you got a lot more. This thing's at all-time lows, at least pretty much anyway. The portfolio value you would have, especially if all you were playing with AMP, but your AMP play in here, the amount you would have lost from here to here would have been mind-blogging. The amount you would have made from here to here was mind-boggling. And the amount you will make on any bull runs upcoming would be that of mind-boggling, because that's what this volatility allows. Especially if you're getting right with a lot of you make a lot of good decisions that work out. Meaning, instead of playing previous low, you did do lower low. So now the markets move a bit. Lower prices. Spoiler alert, it's November the 4th. It's a month away from a bull market. Or this one was a little bit earlier. So I guess that wasn't much of a spoiler. But going back to just normal mathematics in here. You have a 2,700 price, buying at around 2,000 unless you're starting to see satisfactory profit. However, better profit in here. So the question is, again, where were you selling? Did you have 1 or 2 sell orders get filled? Where do you buy back? I'm now looking, now that the 18 average is starting to rise, Now that price action barely broke this level of resistance, I would not be looking to play for a lower low. That's for sure. It's either matching low, which is either 1840-ish down to 16 change, 18 average of lows, or this previous level of resistance at about 2500, and maybe this would meet up with the 18 lows. That's where you'd be looking to buy. Sell orders, I mean, they should be all over the place at this stage. You should have like 6 of them in the market went. Actually, it'd be easier for me to do it this way. Let me just go in and... So you'd have one maybe at around this key level, this key level, maybe here, maybe somewhere in the middle here, and I mean, you can have sell orders all over the place like this, ready to go. Of course, on Bittrex and sites like that, every month you're gonna have to redo them and such. But there's many situations where you're going to want to adjust to the message of the market anyway. Selling here, there's a buyback, easy buyback, easy 18 lows after a move here. Now, granted, if you think it's all bearish and such, then you were going to miss out on what I would presume to be a great opportunity, because I see November 27th and I know these things break out at the start of December. Yeah, I guess it might hit the previous low. I mean, I don't know exactly what this thing does, but if you bought here at 22 and you see the price at like 29, that's an okay gain. It would have worked out for the buyback. As you can see, you're buying at 20. If I sold here and I'm looking at the chart, I just log in, I'm pushing the buy button for sure in a heartbeat. If I say I sold whatever at 29.54, say I sold for every 1 unit I sold, I'm going to buy back about 1 1/4 at 22.09. And then I'd be buying more on the way down. Buy order cities have been hit when the price goes from like 21 down to 11.22, and you probably won't even place yet another sell order, maybe somewhere around here. This thing's almost over now. It's a long video, but it was intended to be 42 minutes. I was ready to go up to an hour because I seen I can do that. And I've already forgot what happened from the 42 minutes ago when I started recording. That's how my memory works. If I really, really want to know something, I have to store it well. I had 29.86. This high would have been 29.79. Oh, doesn't that make you unhappy? But if you did have it a little bit lower, you had your buyback. And then selling again. Selling again. So after a situation like this, 18 average of lows is 2,500, steadily rising, I'd be looking to buy around 3,000. Look at these sell orders hitting. I mean, this is the whole point of this game. You just wait your turn, meaning they'll tell you when your turn is to sell and buy, and you just do such. But now you're starting to have your portfolio a lot better looking than it did at the start of December. And here's the interesting caveat. With price action at 58.74, your portfolio plan amp is decently better than when it was 58.74 on August the 13th. Continuing forward. All of these sell up here, buy down there. No excuses not to. Buy somewhere down here. I said 5,000. That's where the buy would have hit. Okay, maybe you got that. I wouldn't have. I would have got 5,000. And that's where you stand right now. So as you stand, you have your sell order up here at 73, 85-ish. You would probably have a buy order in at around 3,000. Or when you look at this even further, oh man, I don't know if I want to do high or low. Maybe you have a buy order in at the previous low, which is around 1,500. Depending on how you look at the market. Now that doesn't stop me. If I have a buy order for a lower amount, I just know if it happens to fall, say 2/3 of its value, I wouldn't mind getting me some more. So if I can afford the buy order, and that's a big question, if you can afford it, then I'd put it in. And because I know there's a decent chance it's not going to fill anytime soon, I might be a little reluctant. I'd rather put buy orders I think have more likely of a chance of filling over the next couple of days. But that doesn't stop me from maybe even putting a buy order here because I'm playing short-term technical analysis. And all the times I'm showing the history. I'm doing this really quickly to make this in under a 1 hour video. But you're on each day in the past, you're going to look at more details, you're going to look at multiple time frames, and even do things like calculate some Fibonacci. There's a Fibonacci calculator I'm bringing up now. This is one that I made, but I would look at downside. I would see a low at around 4,200. I would see a high at around 5,550. So I put the numbers in. I see a down target for 35. I expect it to pierce extra. So 35 would place me down to 3,000, 3,100. That is the spot where I would look to buy next on this spot. And it's the mathematical differentials. If you're buying at 46, you don't want to buy unless you get a significant discount, and 3,000 is a third of its value off. And then if you go again at 1,500, that's half off. And that enables you to sell for 30% gain from that buy, 40% gain from that buy, 100% gain from that one, and stuff like that. And the likelihood that one would be up, say starting back when it was 8,000 in here, 7,000, yeah, they're up. If you play this strategy and you entered in, say, in here, you bought first, especially definitely if you got this gain in 2016. But even if you entered in, say, in say April of 2017, at around 7,800 in this congestion area, you're probably most certainly up right now. You're not up that much, but it's better than being down 35, 42% or whatever that number might be. And then for those people that have just bought here, you don't enter when markets are way overextended. So if you're ever trying to get into a code and play this strategy, I would be a little reluctant to do anything more than just small dabs of amounts if I'm even going to play. Because if a market's been up so high like this, I want to wait for a significant correction because they seem to always happen. All right then, so 47 minutes and change, that's fine. This is, I think, very good information. I know this is going to help a lot of people out in trading, and really technical analysis is something that it is an art, but it's really mathematical set, especially when you put your own guidelines in. But the actual trading and everything, it is really that much of an art, seeing so many different things, understanding the order book where buy walls and sell walls are, understanding how the news may affect it. But you know what? I totally agree with just shutting all of the fundamental news off and just playing the numbers game like this, although quite frankly the web bot information does help as well, but that's a different subject within cryptos. Thank you for tuning in, and have yourself a great day. Bye-bye.